Okay.
Well, good Friday afternoon. It is Friday, the 21st of June. I'm here with Michael Harding of Keller Williams and Mike Elrath, who's actually coming to us live from Oregon Health Sciences University. I'm Bill Roller of Beacon Rock Wealth Advisors. It's been an interesting week in the market. Today kind of was terrible, but let's see, the Dow for the week was up 1.47%. The NASDAQ was up 0.03%. So you could say that's almost a rounding error. S&P 500 up 0.66%. Our friend the SOX was off 1.06, kind of driving that a little bit. The 30-year Treasury up 4.7 basis points to an annual yield of 4.398, and the 10-year up 4.4 basis points to an annual yield of 4.257. Big news on the week, I guess you could say. Nvidia having a little bit of sell-off yesterday and today, which is affecting the market. Briefly, it was the largest U.S. company in terms of market capitalization. So the Dow was up rather strongly today. The good news on that was McDonald's came back with the value meal, a $5 offering of kind of a small hamburger, a small fries, and a small Coke. Keyword in that is small, but the price is comparatively small, so that's something to look forward to. So their stock was up, was the big mover today in the Dow. Mike Elrath, since you're got kind of the wacky connection right now, what do you got for us?
Well, a moment of reflection here on your $5 meal deal. Here in California, that means you only have to work 15 minutes plus a little bit of tax on your $5 in order to afford that $5 meal deal. So isn't that the minimum wage there with the $20, or
No,
is on its way there?
that's the food worker minimum wage for entrepreneurs and everybody else who's not
Um,
salaried.
yeah,
Your pay is still anywhere between zero and
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 more.
$3 an hour or whatever you can make of it. So
Oh, okay, all right, well, food workers. All right, so moving on, what got my attention yesterday was the Citibank uh, gas price forecast. Based on what their forecast of oil production and oil prices is. So Citibank forecasts, if I'm not mistaken, that the barrel of oil would peak at $80 and a year from now would be back down to $60 a barrel. So that's a 25% reduction. Now, if those are their their forecast, that's their forecast, then what I would like to do next is try to forecast who will benefit the most from the reduction in the barrel price. Uh, so there will be winners and losers on that. So that's where I'm going with that news.
well, I guess oil prices briefly jumped yesterday on news that a Ukrainians dropped a drone onto a Russian refinery, but they seem to be down today. So
Well, and their forecast was for approximately 12 months or the year 2025
yeah,
for that price to drop.
West Texas Intermediate crude ended off 0.8% today to $80.64 a barrel. So
Mhm.
I guess if you're going to take a long driving vacation, start planning that for next year instead of this year.
Okay, so the hotel industry will be a beneficiary of lower gas prices and a number of others.
Well, perhaps. I mean, sometimes lower gas prices are a sign of recession. So, uh, did this estimate take into account the economy or chance of recession, or just pure supply and demand?
I don't know what the forecasters in the Citibank what all their considerations were. Try to dig into it and see what we can find.
Yeah, very interesting. Cool. Michael Harding, looks like we're still selling houses.
Yes, and the value is still going up incrementally, and that's a good thing. There wasn't anything really that stood out that I noticed. Well, okay, let me rephrase that. Yes, there was. There was a lot of new houses being sold, and it doesn't reflect it on this sheet right here, but I saw it in the background. Um, a lot of new houses were being sold, but uh, some of them, there was one that was on the market 702 days, and a lot of them were over 200 days. So that's going to have an impact on the days on market average. And I thought about taking them out, but then it was like it would be too difficult to really, you know, um, get a look at the numbers in a true sense because they did add to the overall market. So I just decided to leave it alone. But as you can see on the spreadsheet, it's somewhat of a quiet week. I mean, it's not too bad, but I was hoping we'd get over that 200 new listing threshold, but we weren't off too bad. It's going to be interesting to see what the numbers reflect next week and beyond because we're definitely into summer, and summer is the time of the year where a lot of folks put their house on the market. Everything else is pretty decent. Um, we are trending upward. Let's hope that it continues to go upward in terms of the list price and the sold price. So, but it's just a normal, typical week in real estate here in the Clark County area.
Well, don't forget it was also shortened because of the holiday on Wednesday,
Yes, that's true.
Juneteenth. So that 702 days on the market. Tell us more about that, though. Was that so bad or so good?
It's new construction.
Was this a McMansion?
Uh, to my recollection, no, there wasn't anything extraordinary about it. There was just something that took 702 days to build. Uh, Let me see if I can find it really fast since we're here. But yeah, it wasn't anything. The market was kind of ho hum, but that's a good thing as opposed to
Yes.
rapid growth or rapid decline. So we kind of like ho hum.
Quiet is good.
Yeah, yeah. There was some chatter about the Fed possibly lowering interest rate uh, in the fall or winter, but I didn't find anything that substantiated that. It was just stuff that news clips that you hear because I guess the consumer price index was better than expected recently.
Um, let me check. So much data is coming through.
Yeah,
I sometimes lose track. Currently CPI 313.22, up from 313.21 last month. So it was kind of nice and flat.
yeah.
So that would indicate that, inflation maybe expectations may be dropping still. Well, that's not bad news. So just kind of a summer doldrums kind of weak in the markets. Again, little weird having a holiday on Wednesday in the middle of
Right,
the
right.
week. So yesterday, in many ways, felt like a Monday in the market. In terms of volatility and all that. So
Yeah, I have the data points up, and for some reason that 702 days on market one is not showing up, but what is showing up is quite a few. That's greater than 200 days on market.
Okay.
I was adding it up. It looked like there was about 702 houses that have sold the last 30 days. So I rounded around and it was around 700 houses sold in the last 30 days.
Yeah, let me see if I can find my spreadsheet.
Oh,
I
you
should
want
have it
put it
right.
back up?
Yeah, I was gonna do some quick math
Okay,
on the
let's
calculator, take off my sandals and do my fingers and toes and figure if we can see if we can come up with the correct figure. Well, you know what? I'm just gonna use technology and let it do the heavy lifting. The past 4 weeks,
you want to know what's sold in the last 4 weeks?
529 sold in the last 4 weeks.
What's this? You'll be amazed. 529. There you go.
Yeah. Which, is still pretty good. That's not too shabby.
Yeah,
But
it's not a super overheated market.
correct.
You probably
Which
end up
we don't want in terms of buyers, because if we get back to like it was you know a few years ago, then we're going to be another San Francisco.
well, my key indicator for that is the number of guys like you, the newbies in the the newbie realtors out there. That's definitely a contrary indicator.
Well, I
Well,
just want
three quarters of those that um, sold in under 30 days.
yeah.
Yeah.
Well, I'm just one that prefers a market that's has a sustained growth instead of a rocket growth, because I'd like for as many Americans to be homeowners as possible, as opposed to institutions and investors owning the lion's share of it and driving up the prices. And so that's just me, because when I was a little boy, I used to dream of my family owning a home, and so that's where that stems from, because I know what it's like to live in someone else's house and then have them up the rent and hear the conversations between the parents as to how we're going to afford rent with the rent increase and all that. So that's where that comes from. It's just a sentimental value that I have. I'd rather help more people than fewer obtain that the American dream of owning a home.
Did I hear that or see that Congress, something idea being floated about not allowing institutions to own single family homes recently?
I haven't heard that, but that's capitalism,
Yeah.
and I'm not trying to contradict myself, but I just think there should be a cap on the number that you can own.
And I was just sitting here thinking about supply and demand.
Right.
Get enough supply, and it wouldn't be profitable for the corporations to stay in the market.
Right.
Yeah, well, some things have to happen like that, increase of the urban growth boundary and faster
Yeah.
permitting.
Yeah, and it's way different than Walmart, but look what Walmart did.
Yeah.
Yeah.
Supply and demand, that is.
Yeah, done a great job.
Yeah, I did a quick Google search, and according to this website that I'm on, and well, this is from December 8th of last year. Congress aims to limit corporate ownership of single-family residents. And that's Democrats in the Senate and House have proposed two separate bills that, if passed into law, will reduce the ability of corporations to own single-family rentals. But again, that's capitalism at its finest. I don't know what the answer is to that, but
Yeah.
Well,
It's
yeah.
complicated.
it's a sticky situation.
Well,
Yeah,
yeah,
there you go.
depends on size. There's a little bit of difference between BlackRock owning thousands of homes and mom and pop corporations, you know, small corporations put stuff out.
Yeah. And the thing for me as a realtor, those BlackRock corporations and other institutions like that, they have their own realtor already in their pocket, and you know, so yeah, it's just hard to crack that nut, and not that I would want to work in a circle like that because I'm just not a corporate kind of guy. But it's just difficult for the average realtor to get in that circle and work with them honestly and fairly, because since they have such deep pockets, they can offer below market value, quick close, and I'll throw in all kinds of incentives in there to entice the seller. So I don't know. It's just I'm I don't know. I'll just stop there.
Okay. Well, I got accidentally muted Mike, but so anything else you'd like to add there, Michael Harding?
Nope, that's it. Just a quiet week in the market, and we'll see what the numbers look like next week and moving forward.
So, Michael Elerath, congratulations on your new grandchild, and
Thank you.
hope your daughter's doing well.
Yep, we're optimistic. Things are going to be fine.
There you go. Be grateful.
We are. We love it. Love the children.
Yeah. Well, cool. What's this? Is this a boy or a girl? Actually,
The boy,
what's his name?
Gage.
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 Okay.
Gage.
Well,
Gage. Gage.
okay.
He's healthy. He's got more hair than you do already, Bill.
Well, that's not difficult, and I kind of resent you being mean to Michael Harding that way.
Yeah,
Got
yeah.
He got almost as much hair as I do. I got a head full and a face full.
Well, wish young Mr. Gage a happy birthday, belated.
I will. Okay. I appreciate that.
Okay.
Thanks, guys.
Thank you.
Good meeting.
Prayers for your
Catch you
family.
next week.
Bye.
Thank you.